Volume and price are the most essential parameters for identifying trends in the market. But more often than not, even the most popular trend filter indicators like the moving average only incorporate the price of an asset and do not factor in the volume of the asset. But what if there was an indicator that not only uses the price of an asset to identify the trend, but also takes volume into consideration? Well, lucky for you, there actually is such an indicator. And in this video, I'm going to show you exactly how it works. Let's get into it. Now, you may be asking yourself,
but what is the name of this awesome indicator that uses both volume and price to identify trends in the markets?
Anchored VWAP. The name is Anchored VWAP, but you probably already knew that from the title of this video, didn't you? Now, VWAP stands for Volume Weighted Average Price. It's a widely used trading indicator that calculates the average price of an asset while considering the trading volume at each price level. By factoring in both price and volume data, the VWAP indicator provides traders with a more comprehensive view of the market and helps them identify areas of support and resistance, as well as gauge the strength of market trends. Now, if you search for the term VWAP on TradingView, you're going to find two different indicators, the regular VWAP and the Anchored VWAP, which is going to be the focus of this video, which probably leads you to wonder,
why not just use the regular VWAP?
The primary difference between the Anchored VWAP and the regular VWAP lies in their calculation methods as well as the degree of flexibility. The regular VWAP calculates the volume-weighted average price over a fixed period of time, typically within a single trading day. It starts from the first bar of the day and ends with the last bar of the day, resetting the calculation for each new trading day. This makes it more suited for intraday trading strategies. On the other hand, the Anchored VWAP allows traders to select a specific starting point for the calculation, making it more versatile and adaptable to various trading strategies and timeframes. In summary, the Anchored VWAP provides more flexibility in selecting the starting point for the calculation. This can be especially useful for capturing the market sentiment and behavior over timeframes longer than 24 hours. Now, to add the Anchored VWAP to your chart, you're gonna go to TradingView and load the 1 hour time frame of Euro USD. Now remember, this strategy can be done on any time frame and on any security that you like to trade, so don't feel limited to this. Next, click on this angle bracket icon to expand the trendline tools, and then at the very bottom, you wanna click on this star icon right here to add the Anchored VWAP to your favorite tools. Then you're gonna find it on the very end of your favorite tools list if you have one, and you can even move it around to make it easier to grab every now and then. Now that we have the Anchored VWAP tool added, how do we use it? Well, you just select the Anchored VWAP tool and click anywhere on the chart where you want your starting point to be, and there you go. Now, this indicator is made up of 3 different lines. This middle blue line, which is the VWAP line, and the upper and lower bands, which are just standard deviations of the VWAP with multipliers of 1. Double-click on the indicator to access the settings. On the Style tab, change the lower and upper bands color to yellow, and then click OK. So the traditional way of using this indicator to trade is like this. When the price is trading above the upper band of the VWAP indicator and then pulls back and rejects off of the VWAP line, you enter a long trade. Conversely, when it's trading below the lower band of the VWAP indicator and then pulls back and rejects off of the VWAP line, you enter a short trade. However, using this indicator to trade this way is just okay, to be honest. In order to maximize our profit potential using this indicator when trading live, we need to add one more tool to the chart. Speaking of trading live, what broker do you guys use to trade? Personally, I use hankotrade. As you can see here, this is my trading history. I mainly scalp gold. And up here, you can see that it's actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is the lowest it can go. And for those of you that love high leverage, guess what? hankotrade offers up to 500x leverage. And if that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so you'll have $1,000 to trade with. To access the bonus as well as all the other perks, sign up to hankotrade using the link in the video description. Thank you so much, hankotrade, for sponsoring this video. I love you. Back to the video. Now, to add that one tool that we said earlier, you just click here and type in Market Bias and select this one by Professor X. Next, access the settings and change the period to 60 and the smoothing to 10. On the Style tab, uncheck this first option and then click OK. We're going to be using the Market Bias indicator to identify the overall trend of the market, but more importantly, we're going to be using it to identify pullbacks in the market. When this ribbon of the Market Bias indicator is colored bright green and the price is trading above it, that indicates a bullish trend. When it turns from light green to dark green, this indicates that the market is in a pullback. Conversely, when the ribbon is colored bright red and the price is trading below it, that indicates a bearish trend. When it turns from light red to dark red, this indicates that the market is in a pullback. Now, to trade using these two indicators, here's how we're going to do it. For a long trade, the first thing that we're going to look for is a pullback in a bullish trend. A pullback in a bullish trend happens when the price is trading above the ribbon, and then the ribbon changes color from bright green to dark green. This is a pullback. Now remember, if any of these candles during the pullback happens to close below the ribbon, this entire setup becomes invalid. Next, you're going to take the Anchored VWAP tool and place it on the very last candle before the start of the pullback. That is going to be this candle that is in between the bright green zone and the dark green zone of the Market Bias indicator. Now, here's a very important rule. After adding the Anchored VWAP tool, we want to have at least 5 candles closing below the upper band of the VWAP indicator. After at least 5 candles have closed below the upper band, the next candle that closes above the band becomes our entry candle. Lastly, for this entry candle to be valid, the trend ribbon of the Market Bias indicator should still be colored dark green. All our entry conditions are met on this candle, so we're going to enter a long trade here. The stop loss is going to be set below the most recent swing low. For the take profit, we're going to set it at 2 times the risk. We let the trade run and take profit. For short trades, we're just going to do the opposite. So the first thing that we're going to look for is a pullback in a bearish trend. A pullback in a bearish trend happens when the price is trading below the ribbon, and then the ribbon changes color from bright red to dark red. This is a pullback. Now remember, if any of these candles during the pullback happens to close above the ribbon, this entire setup becomes invalid. Next, you're going to take the Anchored VWAP tool and place it on the very last candle before the start of the pullback. That is going to be this candle that is in between the bright red zone and the dark red zone of the Market Bias indicator. Then, after adding the Anchored VWAP tool, we want to have at least 5 candles closing above the lower band of the VWAP indicator. After at least 5 candles have closed above the lower band, the next candle that closes below the band becomes our entry candle. Lastly, for that entry candle to be valid, the trend ribbon of the Market Bias indicator should still be colored dark red. All our entry conditions are met on this candle, so we're going to enter a short trade. The stop loss is going to be set above the most recent swing high. For the take profit, we're going to set it at 2 times the risk. We let this trade run and it hits take profit. This is just one of the many strategies that you can do using the Anchored VWAP indicator. If you're interested in this strategy, remember to do extensive backtesting and forward testing and customize it by adding things like price action to make it even better. That's been it for this video. Hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching, and I'll see you guys next time.